Rebounded a bit Friday, closing out a rough week for Wall Street. The Dow Jones, NASDAQ, and S&P all made gains Friday prior to the closing bell. The good news comes after the Dow and S&P saw some of their roughest drops ever throughout this week. Experts say the steep drops are due to concerns about inflation created by a U.S. economy that's quickly getting stronger, which could lead to higher interest rates. Well, David Bierman is the CEO and co-founder of Bierman McAleer. Good to have you on the show.
Good morning.
And he's joining us to talk about all of this. So we saw these ups for a while. It was up, and then all of a sudden it kind of went down. What's your take on it to begin?
Our take is that this is a return to normal. This isn't anything to get excited about. I think the reason that people are struggling with it a bit is just because it's been so long since we've experienced volatility and we're out of practice.
Okay, so what advice do you have for investors out there?
First and foremost, just keep it in context and realize that this is nothing unusual. This doesn't mean anything.
Okay.
The average year, going back a century, in the average year we have a decline of 14 or 15% on average every year. We just haven't experienced it in a while. And we know that about 1 in 5 years, the magnitude of that decline is going to be about twice that.
Okay, so stay calm.
Right, and including all of that, if you take the little drops, if you take the big drops along the way and just stick to your original plan, you earn a rate of return historically that's been about 7% above inflation.
Okay.
That's how you compound wealth, and that's how you work towards and then fund your retirement.
All right, so if nothing else, I mean, I guess really it's about consulting a financial expert, really.
Certainly can't hurt. Vanguard released a study a couple of years ago that showed the difference between the rate of return that was earned by clients that have an advisor versus clients that are working alone. And the difference, and this is coming from Vanguard, who is more known for self-help investors, and the difference was almost 3% a year. And they attributed more than half of that difference to behavior management. And we've known for a long time, there's a study that's released every year that shows that the average investor earns somewhere in the neighborhood of about half what the market does in their stock investments.
Okay.
And the reason is behavior mistakes, most of which are made during times like this, or more extreme ones like in 2008 and 9.
Yeah, so I mean, if you may have noticed a dip in your finances, don't necessarily pull things out, just do nothing.
I wouldn't react to it in the slightest.
So the biggest mistakes folks are making, it's on their own.
Yeah. Generally speaking,
Generally.
And I'd say the more that you pay attention to it, the more apt you are to make a mistake. So, fond of this expression, don't just do something, stand there.
Okay.